Hey everyone, it's your favorite gentleman, Marcus Norman of the Gentleman Style Podcast Show. And today I have a fantastic guest coming to the Gentleman Style Podcast stage, Miss Courtney Moeller. And she's coming here to the Gentleman Style Podcast stage to talk oil, gas investing, and helping high income earners reduce their taxes and generate passive cash flow. Yes, ladies and gentlemen, generate passive cash flow even in the most unstable, unrockiest times, such as today. Miss Mueller is also a U.S. Navy veteran. Thank you for her service, serving our country and keeping the bad guys out of our country. She's an Amazon #1 best-selling author, international speaker, and seasoned entrepreneur. Born into a family of oil field professionals, Miss Mueller is the tea. And she's here on Gentleman Style Podcast to share some of the tea, not all the tea, to help us do better and win and succeed in life, and explain and break and debunk some myths today also on the show while talking oil and gas investing, and how she and her family are helping others win in investing in oil and gas. But she has such a diverse history, and I can't hold this lady back anymore. This fantastic guest. You all have to just meet her for yourself. So help me welcome to the stage the incredible Miss Courtney Moeller.
Wow, what an introduction. And thank you so much for having me. I've been looking forward to this ever since we got it booked.
Absolutely. I've been looking forward to this conversation, this interview, yes, for the past several weeks now. And I think you are just perfect timing, because what you do and what your family has done for years is really unique, but it's not new, right? When I think of oil and gas, I think of the Rockefellers back in the day, the oil refineries of old, and the miners going west, right, searching for not just gold in California and the West Coast, but oil, digging for oil. And so you and your family's history is so dynamic, and I'm so glad you said yes, because you could have said no. So I appreciate you.
Yeah, well, I'm excited, and you're right. Kind of that history of oil is really fascinating. Oil used to just kind of just trickle out of the ground, and Native Americans used it a long time ago for medicines, and it's obviously transitioned to now, we're drilling 30,000 foot, horizontal holes into the ground, which just blows my mind that people even figured out, first of all, how to do that and how to recover it, and then that it can be converted into all these other things. It's pretty incredible.
Absolutely. It's very incredible, but it's absolutely necessary. Oil and gas and what you're investing in is something that so many Americans demonize, while simultaneously we rely on it for every part of our life, of our daily living, our cars, our groceries, transportation, you name it. Oil and gas is a staple, and I want you to just debunk that myth, right? So many people have this disgust, right? Electric vehicles is the way. Electric
Well,
vehicle is the
there's a
future.
narrative that's been pushed for quite some time. I mean, over the course of this last, 6 years especially. And I think I'm actually really glad that you brought this up, because a lot of people think that oil is just fuel for their cars. But like you said, it's in everything. It's in medical products, aspirin, sports balls, tires, literally everything. If you're on a computer or a cell phone, it needed oil. And I think what a lot of people don't realize, and this is just a very generic example, but a barrel of oil is about 42 gallons. And this is really rough numbers, but about a third of it goes to gas for cars. Another third goes to diesel for agricultural equipment and jets and things like that, jet fuel. And the other third goes into all of these products. And it's more than 6,000 products that we use. And I think the other thing people don't realize is even a lot of the electric vehicles and the renewable energy resources are completely dependent upon oil and gas. They need it to even be made. Windmills need oil to be lubricated. Concrete that the windmill is actually attached to in the ground, the transportation and diesel needed to get those windmills into place. It's significant.
It is. It's absolutely significant, and it's absolutely necessary. Uh, Tell me, Yeah. How do you have you ever gone back? Have you ever done the story behind why your family got into oil and gas?
You know, I gosh, my dad has been in oil and gas my whole life. And the interesting thing, we're from the Permian Basin. That's, I was born and raised in Midland, Texas. And back in the 70s, my dad would go and find oil. He had a couple of friends, one that was a geologist that worked for, I think, Texaco at the time. And they would go and find oil out in the Permian and they would package those deals up and sell them to companies like Exxon. And so I actually have wells in my portfolio today that were drilled with these bigger companies back in the 70s that are still producing, which is amazing. But I think, I don't know whatever made my dad go specifically into oil, but it's definitely something that has been a part of my entire family. My uncle has a well servicing company. My brother drilled oil. My sister drives rigs and pipes out to these rigs. So it's just definitely something that, I grew up talking with my family about at the dinner table. We've lived and drilled in Abu Dhabi and Pakistan, and my dad drilled in Jakarta for 20 years before he retired. And so it's all we've ever known. We literally would be riding pump jacks on a Friday night after the football games, the Friday night light football games. We would like line our cars up and hang out at the pump jacks because your parties couldn't get busted.
That's true. That's true. And I love that. So tell me, I want to hear it if you can right now. Should investors being concerned about electric vehicles and the need and the necessity for oil and gas going away? Can you debunk that myth? True or
Well,
false? What are your thoughts?
I think it's false. I mean, obviously, I think the interest in electric vehicles has grown, but what I don't think people realize, they've been around for decades. Like this, they're not new. They didn't just come out. There was just this narrative to move away from oil. And what a lot of people have realized, and a lot of these bigger companies and even countries that were moving towards electric vehicles and renewable energy, is that it's just not sustainable. And a lot of even the countries overseas that had put in a lot of these solar panels and windmill farms are actually unwinding that and going back to natural gas, oil and natural gas, because it just wasn't sustainable and it wasn't providing the necessary energy. And I think, one of the things that I want to point out, because we're seeing it play out in real time right now, and a lot of people probably don't realize this, but many countries overseas right now have gone into blackouts. They have shut down schools because of this oil crisis with the Strait of Hormuz being closed. And so if we were really having this major impact from electric vehicles and renewables, it wouldn't be impacting everything like it is. And we're seeing it across the energy space. We're going to see it impact the cost of all of our goods. We're going to see it in our airline prices. We're already seeing it at the pump. I mean, it's going to impact absolutely everything. And like I said, a lot of these countries overseas, they've shut down schools. They've shut down a lot of, I think one country declared Wednesdays a holiday as of right now because they just can't they're trying to sparingly use the resources that they do have. And we've got, I guess, as a world, reserves that can last us through about April 15th. And if this war extends beyond there, we're going to see much, much higher oil prices. And it's because the entire world is still very, very dependent upon oil and gas. When, like I said, we're seeing it play out right now in real time.
Absolutely. Absolutely. What she's talking about, y'all, is one country is implementing a 4-day work week because
Yeah.
they can't import and they can't afford to, with the Strait of Hormuz being closed, they can't afford to have people commuting every day like normal. Right. So we've been forced to kind of like this 4-day work week in some countries. And so they're literally prepping for the crisis. Not that we're out of oil or we're out of gas or anything like that, but they're making preparations now.
Well,
And
and some of the countries are, because all of their oil comes from that area. So they're in dire straits at this very moment. We're very fortunate where we are because, less than 10% of our oil and gas that we use in America comes from that area. So, we're very fortunate in that sense.
absolutely, absolutely, absolutely. This is huge. This is what I'm talking about. This is what I appreciate. Thank you, Miss Mueller, for breaking that down. What would you say who profits? I'm so glad you brought up the Straits of Hormuz and the war that we're currently in. Who profits, or is this a zero sum game? We're profiting now if we invest in oil and gas, but as prices continue to go up, it's no longer a good investment. Can you talk about the mindset that investors have, or should be thinking about, or should be considering right now when investing in oil and gas? Because I see right now, okay, oil may be $20 a barrel or $30 a barrel, and maybe that means I'm making more money. Or if oil prices get $100 a barrel or $110 a barrel, it's no longer affordable for me to pay to ship that in. Tell me the mindsets. Can you speak to that?
Yeah, and these are really great. Everything you just said is something that needs to be taken into consideration. So obviously, the higher oil prices are, the more the oil companies make, the more investors that are investing into drilling make. And so, right now, it's really great for us as investors that are drilling and making our money off of selling oil that we're pulling out of the ground. I hate that it's coming to the detriment of others. That is the caveat to that. But it's definitely more beneficial for investors. But I think when you're looking at investing in oil and gas, you have to look at so much more than just the price of oil. Every project's going to be a little bit different. And I always tell everybody, oil and gas, just like real estate, the location and the operator matter, and they matter in oil and gas. We like to partner with really big companies like EOG and Continental. Those are kind of your equivalents to like Exxon. Some people have heard of those names, some haven't, but these are really big names. Many of them are, billion-dollar companies. Some of them are publicly traded, but they're drilling in places like the Permian Basin and the Bakken and these major producing areas. So if you're looking at investing, you need to figure out where they're drilling. But I would say probably one of the number one things you need to figure out is, what is the break-even price for that project? Because every operator's break-even price is going to be different. Bigger companies have the economies of scale, so they're able to drill for, cheaper than some of the smaller companies. They're just able to do it. It's just more economic. And so you got to find out what that break-even price. A lot of our stuff is $35, $40. So we're profitable down to, let's call it $35. But if your operator's break-even price is 65, they had a really tough 2025. And I know a lot of people that invested in deals, and not only were they not doing distributions, but investors were having to come in and pay those monthly operating expenses, because you still have to pay to keep those wells going regardless of what the price of oil is doing. So the price of oil matters, the operator matters, the location matters, and that break-even price really matters.
Absolutely. Absolutely. I want to talk about a little back to the origin of oil. Do you feel, I feel like when I think of oil investing and gas investing, I see the robber barons, right? The Scrooge McDucks of the world, and you're just counting your money in your vast pool of money in your pool in your backyard, and you're just swimming in oceans of money. Is the oil field and drilling business, oil and gas business, still a good old boys club? Is it who you know?
Oh, it's
in order to
definitely
get in?
still it is definitely still a good old boys club.
Really?
Absolutely. I would say, I can remember, going to the 007, which was this bar in Midland that my dad did a ton of business in, and they did business on a handshake. And a lot of that is still very present today. And, I was telling somebody that I was at an oil and gas conference in Houston last year, and I was there with my daughter. She works with me full time, and it's a lot of men, and there's a few women running around there, but not very many. But this little old oil and gas attorney, we're standing in a circle, and there's several of us talking, and he looks over at me and he says, "Oh, I know this is probably all going right over your head." He's like, "I can see your eyes rolling back in your head. My wife and daughter don't understand either." And I just thought, what an ass to even make that freaking assumption anyway. And I just thought, you have no idea what I do, what I know, what I don't know, but that's on him too. Fortunately, I have built really great relationships in this space, between the foundations that my father built and even the relationships that I have today. And they're very valuable, but it definitely is still very much a good old boy network. I do not have like a pool of, or a room of gold, or a pool of gold that I'm swimming in. I wish it was like that. I think, you know, I am definitely more of a safer, oil and gas participator. I want to go in and drill in areas where I know we've got gas. We're not wildcatting, and wildcatting is when you're out, exploring, trying to find, new big pools of, oil in the ground. And, we just don't do that. You have the potential to make a whole lot more money doing that, but you also have the potential to lose a whole lot of money in the process. And that's what it was like back in the days. People didn't know how to figure out, where oil was sitting. They were just spending tons of money just drilling holes in the ground in hopes of hitting oil. And there was a lot of money lost. And that's actually why we have really great tax benefits in the oil and gas space, because we do need oil and gas for absolutely everything. The government said, look, we're going to give you really great tax incentives. So if you'll go out and drill, we're going to help you offset your active income. We're going to give you really great tax write-offs. And so that was to incentivize people to go out and explore and drill. Fortunately, over the decades, technology has gotten really great. And with the introduction of horizontal drilling and everything else, and, drilling with these big operators in these proven basins, the success rate is over 90%. So it's very, very high. And the likelihood of drilling a dry hole in that scenario is actually not very likely. It can definitely still happen. And I do see it happen in other areas, but it's with somebody that said, I'm going to go drill a well over here in the middle of Florida. Well, that's just not where I want to participate. Does it have oil? I don't know. Could it? Maybe. But I'm not going to go test that out and figure it out. So you can go do something like that and make a ton of money if you're right. But you're also taking a lot of risk, and you can get your hiney handed to you at the same time.
So you're not wildcatting anymore. Your company is not wildcatting anymore. And thank
No.
you for breaking that down and describing that. Why not? Have we found all the oil that we're gonna find? Is it just that
That's
expensive?
That's a good question. I would say we have pretty much found all of the easy oil that there is to recover. A lot of what is left, there's still a lot of oil left, but it's much deeper. It's much more expensive to pull out. A lot of our wells that we're drilling, and just to give you an example, most of them are 2 to 3 miles vertical, which means up and down, and then they go 3, 5, 7 miles sideways horizontally. And so, some of these wells are, you're talking about 10-mile wells in the ground. It's mind blowing. I'm always fascinated that they can do this. And what people think is that oil just sits in this giant pool of oil in the ground. And, there's no oil lakes in the ground. Oil actually sits in rock. And that's why we have to have fracking. And, what happens is when those wells go sideways, they have to go in and they have to break up that rock to create cracks so the oil can flow out and up to the surface. And so when they go in and frack that, they break the rock open, and then there's usually little pieces of sand or other material in that fracking material that will go into those cracks to keep the cracks open so the oil can continue to flow.
Love it. Science.
Yeah. Science.
There's the science of it. Is the oil and gas business would you consider it a male dominated industry, or is that no longer the case?
Oh, I would say it's definitely male dominated. I have like a knack for finding my way into male dominated everything. It just is what I do. I don't, I was in avionics when I was in the Navy. So we repaired all the electronics and stuff on like the F-18s and things like that. So I worked in a shop of 80 men and me. And so it was a very, very male dominated space. And then I, got out of that and into investing, which is pretty there's more women in investing, but it's still pretty male dominated. And then when you narrow that down to oil and gas, that is very male dominated. I don't know any other female oil and gas fund managers at all. I don't know a single one.
How do you think women are better investors in this space? And why or how so? Because I know what Kevin O'Leary says. Kevin O'Leary, a famous Shark Tank investor, He says all the investments that he's made when he buys a business or invests in a business are women ran. And so, what
Okay.
are your thoughts? I want to see.
I think and this is I'm going to kind of take you back just a little bit. I'll
Yeah.
never forget when I first moved into this space. I guess I stepped into this room, I joined this mastermind, and first of all, I was asked to come and speak at an investment conference and do a panel with Robert Kiyosaki and G. Edward Griffin and Peter Schiff. And I hate to admit this, but at the time I didn't even know who those people were. And I'm Googling them, I'm looking them up, and then I was super intimidated. But I had no idea that there was this alternative investment space out there. So I said yes to that panel, went and did it, and learned about all of this investment stuff going on that was outside of the stock market and everything else that we'd been taught. And I was blown away. And I just thought, I've got to get involved in this. But when I stepped into that mastermind room, I'm listening to all these people talk about what they were doing. And half of them come to figure out I was kind of intimidated by that. And I finally figured out, you know what? I do belong to be in this room. I am really good at what I do. And then I figured out that half those guys were completely full of shit to begin with. And they inflate their numbers. And I don't know. When I say that honesty and integrity matter, they matter. Those are non-negotiable items for me. And so I've learned a lot of hard lessons over this last several years. And I try to do things better, and I try to figure out, every single time we do something, I'm like, okay, how do we do this better? How am I a better communicator? Before we even got on this call, I was working on typing up, my investor updates, and I send out tons of communications. My investors have my phone number. And I think a lot of fund managers, and I don't want to just group everybody into something, but I have personally found that in this space, people are teaching things. There's all these coaches, they're teaching people how to do stuff, but these people don't really understand the asset. They haven't gone through cycles. There's just a lot of learning curves there that haven't happened. And the arrogance that goes along with it is mind blowing. And so I don't have any problem saying, you know what? I don't know what that is. When I first got involved, I didn't know what a cap rate was. And I will be the first one to raise my hand and say, I don't know what that is. Can you break it down? But I find that most people don't want to be that person to raise their hand or admit that they don't know when everybody else in the room is so brilliant, right? And everybody knows everything. And I think that trickles down into the way people manage their deals, the way they raise capital, and the way they acquire their assets.
Absolutely. And so, how do you acquire assets? What are some things you ask as a woman for the woman watching you when acquiring an asset? What are some questions that you
Yeah,
consider?
that's a good question. We have a really, really strict list of underwriting, I guess you could call them rules or criteria that we follow. Right off the bat, it's got to be, a major operator, major basin, our acquisition costs. So one of the biggest things and the reasons people come to me is because they're like, hey, I made $500,000 at my job this year. I'm paying a ton in taxes. Can you help me? And the answer is yes. And I want my people to get 90%, of their investment as a loss. And to do that and to make sure we can do that and provide that, we have to have really low acquisition prices compared to what our drilling costs are going to be. So, we look at who's drilling it. We look at where they're drilling. We also take a look at how the other wells in the area are performing, what's kind of historically happening there. Can we do a minimum of a 2x on this deal? Is the acquisition and drilling costs going to give us really good tax benefits? And so we have kind of this list, what's the break-even price of the deal? And if we can't hit those first few things and check mark that off, we don't even move on to anything else. We probably get 50 deals a week that come across our desk. And plus we have a really great team of landmen that are out hunting stuff down for us too. And so we have really great deal flow, and we pass on a massive amount of stuff because it just doesn't meet our criteria. And if we can't provide those things are the things that are going to protect us when oil drops to $50 like it did in 2025. And we were able to continue to do distributions when lots of other deals weren't paying anymore. Not only were they not paying, but investors were getting capital calls to cover those monthly operating expenses. And we did not experience that. And it's because of our strict underwriting rules.
Absolutely. One of the things I heard you say, thank you for that. Thank you for breaking that down for the young lady that's watching you and interested in investing herself and getting into the space. One of the things that stood out to me, I remember, was you don't wildcat, so you're not investing, you and your investors are not investing in finding new wells. So that means you're only investing in existing wells.
No, we do go and drill new wells. So we
Okay.
drill new wells. Our tax benefits come from something called IDCs, which are intangible drilling costs, and we get those from drilling new wells. Those are like the labor and the fuel that go into drilling the well, things that don't have a recoverable amount that you can recover later down the road. So the tangibles are like your equipment and things like that. We do get to write that off, but the intangibles is the biggest cost and the biggest contributor to the tax benefits. And so we really want to focus on those intangibles. So we are drilling new wells, but like I said earlier, when we're drilling with, let's say, I'm going to just use Exxon as an example. Let's say Exxon is going to go drill 5 wells in the Permian Basin. The Permian Basin is the number one best producing basin in the United States, and Exxon is the number one, operator and producer in the United States. Well, I know, and I think this is something else. When you go in with these major operators, they have almost all the skin in the game. They are not putting deals together to raise capital to fund their projects. They don't need our money to go drill. These are multi-billion-dollar companies. And so when Exxon says, hey, we have found a great spot over in the Permian, we're going to go drill these 5 wells, and they're going to spend $75 million to go do it. I know that they have put the time and research into those wells before they decided to go spend the money. They've got the best geologists, the best technology and everything. So I don't really have to do my homework on Exxon and what they're doing. I really just have to go in and make sure our acquisition costs are good. And in the area where they're drilling, what is the typical EUR, which is the estimated ultimate recovery of oil and gas in that area? We need to make sure that what's drilling fits what we need to return to our investors. And so that's really more of what we're looking at. And we come in as a very, very small interest holder. We'll buy like a 5% interest in those wells. So we're participating very, very, if it's $100 million to drill it and we're coming in at 5%, our portion of that drilling cost is $5 million, in that project. So we're very small participators.
That makes sense.
Yeah, and we do that for a whole bunch of reasons. First of all, it limits how much we're exposed to that, and it allows us to spread our dollars across a lot of wells instead of just a couple. I like that, if you're in that project, and I don't care if you're Exxon or the smallest operator out there, you never know how wells are going to produce when they come online. They can be super rock star gushers, or they could just trickle oil out. You just never know what you're going to get. So I'm really big on diversification. Instead of taking, $10 million and plugging it into a couple of wells, I want to take $10 million and plug it into 10 or 15 different wells in different locations and different operators. So you get that good diversification, because you just never know how that well is going to produce when it comes online.
Thank you for that. One of the things that
Mhm.
stood out to me when I sat through a webinar for oil and well
Investment. Yeah.
investment is, the gentleman said, well, one of the things they do is not only diversification, which is what you said, it's spread out. They purchase or invest in several locations or several sites that have already been surveyed and have already done the not the excavation, that's the wrong word, but they've already done the site survey to discover and use the technology to discover there is oil down here. And they've
Yeah.
already done all that work. They've already acquired the assets and the land. They just need the money to purchase the equipment and start digging. And
Okay,
but
so
and
they
but
are
they
drilling their wells themselves.
it sounded like that. But the also thing is they also had a pool of sites that were already dug and was
Mhm.
producing oil. So they diversified by not only allowing you to invest in multiple new sites, and that was the prospectus for the 10-year, I believe 10 years that this project was going to continue, and your capital was going to be invested in these wells and these sites. But they also said, hey, one of the things that's going to also produce income for you right away or fairly soon is we already have some wells that are already making money right now. And so you're also invested in those as well. Is that a part of diversification as well in your strategy, or?
It definitely can be. So, if you are investing in already producing wells, you're not going to get the active tax benefits you're going to get from drilling. And so, it's really just about your strategy and what you're looking for as an investor. And that's what I tell everybody. When people come to me, it's kind of like, okay, why are you coming to me? Are you coming to me because you're just looking for monthly cash flow? Are you looking for those active tax benefits? What is it about what this offering has that interests you? And I always want to make sure that it aligns with people. I know some other people that offer oil and gas investments, and they're structured very different from mine. Some of them are more like real estate, and it's more of a quarterly cash flow with a bigger upside on the end, where mine is more, it returns capital faster at the beginning with really high tax benefits. So, if what I have doesn't meet my investors' needs, I'll say, hey, go check this one out, or go check this one out, because it needs to align. So you've got mineral rights, you've got already producing wells, you have wells that are being drilled. So there's a lot of different ways that you can participate in the oil and gas space. And it really just depends on what you need, and what your goals are as an investor as to which type you should invest in. But for diversification, for me, we're only drilling new wells. We do not buy any already existing wells. We are only diversifying through newly drilled wells.
Absolutely. Miss Courtney spilling the tea on Gentleman Style Podcast Show. Love it. This is absolutely fantastic. This is absolutely necessary. We have to go to a quick commercial break. Speaking of wells and digging and paying some bills, we got to pay some bills, y'all. We're going to go to a quick commercial break. Don't go anywhere. Stay tuned. Stay with us. We'll be right back. You deserve a path to healing and growth. Whether you're struggling with mental health issues, relationship conflicts, we have the tools, experience, and care to guide you.
At Lifeology Counseling Hampton Roads, we're here to help you break through the barriers that hold you back.
Reach out today, because healing begins when you decide to invest in yourself.
If you're looking for a reliable professional trucking and logistics service, you've come to the right place. Musa Trucking is a veteran-owned and operated premier transportation provider that can help with all of your trucking and logistics needs. Musa is revolutionizing the trucking industry through strategic partnerships, the development of core personnel, and the use of cutting-edge technology. Our inventory system ensures that cargo ends up divided into the right trucks and reaching the correct destination. Our drivers are dedicated to transporting goods efficiently and safely. Contact us today to get started by visiting the website on the screen or by calling 757-756-5246.
Support for Gentleman Style Podcast is brought to you by Manscaped, who is the best in men's below-the-waist grooming champions of the world. Manscaped offers you precision engineering tools for your family jewels. Manscaped just launched their 4th-generation trimmer, the Lawnmower 4.0. You heard that right, the 4.0. Join over 2 million men worldwide who trust Manscaped with this exclusive offer for you. 20% off free worldwide shipping with the code GENSTYLE at manscaped.com.
We are back to the Gentleman Style Podcast Show, and we have the incredible, super fragilistic, expialidocious Miss Courtney Moeller on the Gentleman Style Podcast Show. She's helping us debunk some myths around oil and gas investing, and she's helping us learn and educate ourselves and better ourselves so we can invest in oil and gas and beat back the fear. One of the things she mentioned, she's worked with and spoke on panels with Robert Kiyosaki. And one of the things, Rich Dad Poor Dad aficionados like herself and experts and professionals like herself is don't get paralyzed in the research. Do enough research to be knowledgeable. Listen to this podcast, listen to her, and then do it. Go and do it. Go and invest and take a chance on yourself because you are absolutely worth it. If you miss anything, any of the facts that she laid down here today, go back, scroll back, and check her out. She's absolutely phenomenal, and she's here joining us on the Gentleman Style Podcast stage, debunking the myth and tea on oil and gas investing. Miss Courtney, what is the most sexiest or unique moments you've experienced in the oil and gas investing business? A moment that just like, wow, that was something. Wasn't expecting it, and it caught you off guard, or took you off guard, took your company off guard, and it was a really big win that you weren't expecting.
Yeah, I've actually had a couple of them. One of them was the most recent one. Here recently, we moved from doing just smaller individual deals with multiple wells into the fund model, and gosh, we got our K1s here last month for our first fund, and they came in at 95%, K1 loss for our investors, which was huge. I mean, just huge. That means, and I'll translate that. For $100,000 investor, they got a $95,000 K1 loss, which means if you make $500,000, your taxable income just got reduced to 405 just from that investment. So that was a huge win. But we have had others where, gosh, that time from when you drill to the wells come online and you're waiting for that first check to start coming in, that little gap in time there is tough because some of those operators start paying immediately after the wells come online. Some of them wait like 3 months. So there's always that quiet time where it feels like nothing's happening and you're like, what's going on? And everybody's anxious to start getting paid. And we had another deal right off the bat. We ended up paying like 33% right on that first check from that first few months of income from those wells producing. So that was another huge win. I've never been so grateful to be able to send that kind of message. And I got tons of texts and they're like, oh my gosh, this is like the best check ever. Thank you so much. When somebody invests $100,000 in their very first check they get back ends up being a third of what they invested on top of the tax benefits. That's a huge win.
That is a big win. That's a major win. Now, to keep things fair, I can't talk about the wins and the successes without some negatives. So, can you share one of the biggest failures you've had that people would never guess from oil and gas investing?
Yep. Well, I have a couple of different things that I've gone through. I would say the very first thing that I ever happened, and you probably don't know this, but when I got involved in the alternative investment space, I was invited to come and be a part of this oil and gas deal and raise capital for it. And because of the people that were involved, I was so honored that I got invited to that table. And I just couldn't believe that I got to be, because they were very selective on who they let in. And it turned out to be a Ponzi scheme. So I ended up raising capital and putting my own money, and my partner put in like $700,000. It was I would say at the time it was the worst thing that has probably ever happened to me in my life. I'm actually very grateful today for that experience because I feel like that has shaped me into who I am. It sucked, but I was really thankful for my oil and gas experience because it's actually what helped me to figure out that it was a Ponzi scheme. And even though I had raised some capital, I stopped, and it caused about $25 million to be saved. So I'm actually very proud of that. And so that's a whole nother story and something we can go into. But I want to give you an oil and gas example too, because as great as these oil and gas deals can be, there are also challenges. We're digging holes in the ground. And, when you're buying assets, I don't care if it's a house or a car or an oil well, everything is not rosy and perfect all of the time. And so one of our deals, it's my Colorado 3 deal. It came online in January 1st of 2025. And for 6 months, this thing was like a rock star. And then come to find out the pumps that they put in. So when they drill these wells, they'll then turn around and put on pumps like pump jacks, kind of like what you see in that picture, or other types of pumps that help pull that oil out of the ground faster. Well, the type of pump that they put on these wells caused the oil to turn into like sludge, and it ended up blocking all 4 wells. It happened in all 4 wells, and they just finished putting them in. They tried everything under the sun, chemical treatments, all kinds of different things to fix it. And they came back and said, okay, the oil was going down pretty fast, and found out that this was what the problem was. And the solution was to put in these other types of pumps, and they were really expensive. I mean, it was going to cost about $1 million to swap these pumps out. I mean, it was a really expensive undertaking. And because of that, they swapped out one at a time to make sure it fixed it. But ultimately, distributions had to stop. And then what I will say for myself and my team is that instead of passing the cost on to investors, we paid for it out of our pockets, because, we get billed for all of the expenses. And it's really important to us to not have our investors have to contribute anything after they invest. And so we covered that additional expense. And so distributions have been paused. We do know now that they have replaced those pumps, that the wells are producing really well, and we're still waiting on the production levels from them. But I mean, we're talking about hundreds of thousands of dollars that, we went in the hole, and distributions have had to be paused, and that sucks. And when they come back online, we're going to take that first bit of income to, pay us back for the expenses that we covered, and then we'll be able to start distributions. The great thing about it is it happened while oil was sitting at $60, so it was a good time for them to go offline. And now that they're coming back online, oil is sitting at $100, so the timing couldn't have been any perfect. But we haven't had distributions for several months on that, and that sucks. So that is definitely probably one of my worst case scenarios.
And thank you for that. Thank you for sharing that. Thank you for speaking on that. Right, because I know that it sounds tragic, but it also speaks to the nature of how you do business and the relationships that you've built with your investors, that you're not here to say, hey, we need to do a capital call. Hey, we need to do a capital call. Hey, I need to, this is what happened. There's a morale, there's a guiding compass. And I want to say, I don't want to say that this was because of your Navy experiences, because this is a long line of dynasty in your family of good operators. So I want to acknowledge that this speaks to you and how you guys do business with your investors. So although it was a temporary delay and you had to pause, you still, in essence, what I consider is the right thing. You did the right thing, even when it hurts, when no one is looking, right? That's what they say.
Yeah. And I'm definitely not trying to give myself a pat on the back, but stuff happens. And I think that's the other thing that it's really important for investors to ask is, if something happens, how do you handle it? What's your contingency? What does that look like? Because that matters. It really does. And I hate that for months now, my investors haven't gotten paid on that deal. The fortunate thing is, we've produced 10% of the oil in that. So we have a massive amount of oil left to produce. I really believe in that project and the team, and it's great, but it still sucks to have to have gone through that. It's not fun, but I do pride myself on communication and trying to keep that communication up. And here's what's going on, and here's the reports we're getting. And I think they'll even take the bad news better if you'll just be honest with them and give them the information. I think a lot of people hide from it and don't even confront it. And I think that is where people go wrong. The Ponzi scheme, when I lost investors' money, I sat in a hotel room for 2 days and I called every single one of my investors one at a time to let them know what was going on. And I was terrified and my hands were shaking, and my investors were amazing. They were like, I'm so sorry. I can't believe you're having to go through this. What can I do for you? And I just thought, I'm calling to tell you I've lost your $100,000 and you're asking what you can do for me. But I also feel like that it's just the way things get handled. I mean, people know things go sideways and things go wrong. It's how you handle it and how you take care of your people. Your people just want to know that you care and you're going to take care of them, right?
Right. Absolutely. Absolutely. That's huge. Big. I love this. I love this. Another round of applause. I can't brush past it. I can't help it. What's something that how did you identify the Ponzi scheme? What red flags kind of like dating, there are
Mhm.
signs that you saw that stuck out to you and said, "Look, hold," and you saved $25 million. What?
Yeah. So the first thing right off the bat was I had an investor that said, I heard this was a Ponzi scheme. And I was like, what? Here are our patents. The guy that was running the whole thing sat on the US Department of Energy board. So, I mean, he had a lot of credibility all on his own. And this technology and what we were selling was on our government's website. And he was an attorney, he was the mayor of his town here in Texas. And so, like I said, I mean, you could find tons of information on this, but as I was going down that, I was like, okay, the contracts were supposedly under an NDA with Exxon. And so it just made me kind of press and say, I'd actually like a copy of the NDA, and they weren't willing to give me that. And then I said, okay, I want an agreement signed by Exxon. Maybe we can't have the contracts, but they can at least sign something that says they are in business with you and they have your equipment deployed to their fields. And while I was waiting on that, I went ahead, our agreements that we did have showed which counties Exxon had our equipment in. And so I went ahead and pulled oil and gas information is all public, which is beautiful. So I pulled all of Exxon's natural gas wells and put them into an Excel spreadsheet for every one of those counties. And then I went in and did a Google Earth photo of each one. And there wasn't a single piece of that equipment at any one of those wells or locations. And so there was a whole handful of things that I did. But, and the other thing was we had just started getting the production reports and they were all internally generated. So I said, these are all internally generated and I know what oil and gas production reports look like. And so I was like, I want the original ones. You can redact the private information from it, but I want the original ones. And I also want the receipts from the equipment being made at the facility. So, I created an entire list. I started thinking, okay, what else could I ask for? And I didn't get any of it. And at that time, I just said, look, you haven't provided anything that I've asked for. So at this point in time, I'm going to terminate. And we had raised $5.4 million for a deal at that time. And we terminated. I sent my investors their money back. And actually the 5 deals behind that were coming after mine got terminated as well. And that was the end of March, 2023. And in May, I got a phone call from my attorney on May 5th that they had been raided by the FBI and the SEC. Yeah. So the whole thing was crazy. People treated me like I had lost my mind and who was I to even challenge this? And if I do this, I can never be invited back into these circles. And it was a really emotional, tough thing. I mean, I had other people that were raising capital for it that were like, hey, ask this question, but nobody was willing to stand with me and demand that information. And so finally, the attorney that was doing the docs, came up and said, you know what? Not only do I want everything that Courtney's asking for, but I want A, B, and C also. And if I don't get that, I'm not doing the docs for these other deals. And I'll tell you, I sat there for a second and I just started crying, and it wasn't a sad cry. It was like an emotional release, because for almost an entire month, I had been fighting that battle on my own and treated horribly through that process. And I ended up being right. So I was hoping I wasn't going to be, but I knew I probably was. And I was.
Wow. Wow. Again, this is Miss Courtney spilling the tea, helping us do better in our investing, in our careers, in our life. That's huge. Thank you for sharing that. Thank you for sharing your heart on that. What is something that you had to unlearn, a belief, a habit? What's something that you had to change as you and your partner and your family learn from this space? What's something that you used to do that you no longer do anymore?
Oh gosh, something that I used to do that I think sometimes I forget that everybody doesn't know everything that I know. Sometimes that is really easy to forget that the knowledge that I have is not common knowledge. And I have to remember that quite a bit. But something I used to do that I don't do anymore. I feel like there's more things that I do now that I didn't used to do. I feel like I've grown so much as a person over this last 10 years. I didn't used to set goals, and now I set goals, and I've got my kids setting goals. And, I'm really big on visualizing things and where we want to go and where we're headed and why. Why are we trying to accomplish those things? And so I think it's more about what I've implemented more than what I have changed. I will say I'm a lot more intentional about who I spend my time with. People that I used to spend a lot of time with, I don't find those conversations beneficial any longer. I don't find it to be a good use of my time. So I very much have changed what I spend my extra time doing. And I think that's probably the biggest change, actually.
Absolutely. Absolutely. I want to continue here. What's the requirement? What is needed? What does an investor need to bring to the table in order to invest with you and your company? What's the minimum amount? What's the maximum amount? Do they need to be an accredited investor, non-accredited investor?
We do work with accredited investors. The way that we have our funds set up, it is a requirement so that we can have our exemptions that we need to have into place. We don't have maximums. Fortunately, there's a lot of benefits and exemptions that we get as oil and gas investments that, don't apply to a lot of other spaces, which is awesome. So we don't have limits. We do have minimums. It's typically $100,000, but I also have people that will come in at 50. And I think it's really important to allow people to come in and experience an asset class, especially if it's new. And if they're new to me, they need to be able to come in and experience me and what I do and what we offer at a level that they're comfortable with. I think that's the most important thing.
Absolutely. And what about can they invest? So you're saying they can invest less than $100,000?
Mm-hmm. Yeah, I have several people that'll do 50. I let two of my younger kids come in at 25,000 just because I wanted them to be able to experience their first oil and gas investment. And so I definitely, I'll have somebody call me and say, look, I need some tax benefits. All I have liquid on me right now is 40 grand. Will you take it? And at the end of the day, I feel like I am on this investment journey that, I'm trying to figure out how to maximize my dollars and make money and create this legacy for my family. I'm trying to teach my kids, and my investors are on that same path. And this is not a deal where I'm coming into, obviously I've got to make money. I work really hard, but it's more about being aligned and going down this path together with my investors. I have tons of calls with them. I'm like, okay, what else are you guys looking at? And, we'll put some, online virtual conferences together that talk about tax strategies and, whole life insurance and, all these different things, because it's so much more than just, oil and gas investments.
Absolutely. What about so I was about to you stole my next question, like age requirements, but your kids are in the investment space.
Well, my oldest kid is 31. So my two older kids are 29 and 31. I think the age requirement is 21.
Absolutely. And what's the turnaround time for you said, are these monthly distributions? Are they quarterly distributions?
We do monthly. So,
Wow.
every single deal is going to be every deal is always monthly, but when those distributions start, it fluctuates some. We closed Iron Horse in December. We bought the very last asset, I think on December 30th. And we've already got some wells online and producing, and we should start distributions anytime now. I would say for most of those deals, because we buy everything when it's already permitted and they usually have already started drilling, it's somewhere between the 3 to 6 month time frame for distributions to start.
3 to 6 months. That's not bad.
Yeah,
That's
it's not bad. Yeah.
And so I completely failed. What are some tax benefits with the oil and gas? I completely failed you in here.
Yeah. So this is actually what, I always tell everybody, do not let the tax tail wag the dog. So you don't want to ever go into investment just for the tax benefits. You want to make sure you're getting a return out of it as well. But non-operated or working interests in oil and gas, decades ago, the IRS said, if you'll go in and explore and drill, we'll give you good tax benefits. So this has been around for a very long time. But they said, if you'll go drill, we will allow your investment to offset active income, W-2 income, capital gains. So this type of investment has the potential to offset really any type of income, which is a big deal. And you'll see everything from, 50% of your investment up to 100% of your investment. So it really just depends on how much of that investment is going into the IDCs, those intangible drilling costs. Now, the other really cool thing is not only do you get that great tax benefit in year one, but you also get something called a depletion allowance, which means the first 15% of the income from the oil and gas production is also tax-free every year for the life of the wells, as long as you own them and are invested in them.
Woo, woo, woo. And you said you're sending K1s. You're not sending 1099 divs. These are K1s that you're sending out.
They get K1s. Our investors get K1s. And so we started this year's K1s back in December. So we started working on taxes for all of our deals months ago.
Woo-hoo. So y'all, 3 to 6 months run up. Are you also allowing non-accredited investors as well?
So some funds do. So when we opened the funds, we now have fund of funds. And so some of the other fund managers have set their deals up where they can bring in accredited or non-accredited investors because their entity has to be accredited to come into ours. But as long as they're raising $5 million, their entity is accredited because it hits that $5 million mark and it's accredited. So you can take unaccredited people into those deals. So if that ends up becoming a thing or you've got somebody that's interested in that, just let me know.
Absolutely. So y'all, that's significant, right? The reason why I'm trying to lay these out is 2 reasons. One, I want you all to make an educated decision, but 2, some funds don't allow. There are funds that allow accredited investors. There are funds that don't allow accredited investors. Also, too, if you think about it in the grand scheme of things, if I need to raise $5 million, $10 million, and I have someone who's like 25,000, it's going to take me a long time to raise $5 million.
Right.
And so they have to look at the numbers and say, okay, I can't take you because I need to leave room for the bigger stuff because it's going to take me forever. And especially if there's a time metric, right? I'm trying to close this deal within a certain amount of time. So these are all the things that they have to take into consideration if they're going to allow non-accredited investors or if they're going to allow someone with less than the minimum. Right. Because they have to raise that money usually by a certain period of time.
Well, and it's a lot of work. I mean, when you have, when you talk about the K1s and the distribution, I mean, it's a significant amount of work. So I don't think people realize if they haven't managed a fund, how much work actually goes into that. I mean, this is all I do. I don't have a job and this is what I do on the side. Like, this is what I do all day, every single day. And I'm really blessed because I have a laptop that I can haul all over the world and work from anywhere. And I'm very thankful for that. But man, it is work. I am a steward of other people's money and I don't take that lightly.
Awesome. This has been a fantastic conversation. You have shared so many nuggets, so many gems this episode. My final 2 questions is, if you could leave some words of wisdom, you dropped gems all throughout the show. But if you could share one more nugget, if you had one more nugget in the hat to share for that young investor who's scared, who's nervous, the economy is upside down, they don't know whether they should invest, do they invest, that young girl who's looking at you right now and says, man, Miss Courtney is my idol, but I don't know if I can do what she does because she's so smart, she's so intelligent. What would you say to her right now?
I would say that I had no idea, 5 years ago that people raised money for. I would just figure, get in the rooms, getting in the rooms with people that are doing things is how I learned. I went to an investment conference and I learned so many things and met so many incredible people. And that's when I figured out, okay, who's been in these spaces, a long time, who's been through the multiple cycles, who can I trust, who actually knows their asset class and understands the macroeconomics economics of it, right? So it's just a matter of getting in the rooms. There's something really powerful. I love Zoom. I love being able to do these types of things, but getting in the room with people and making those connections and having those in-person conversations are more valuable than anything.
Absolutely. And lastly, how can people find you? How can people connect? How can people learn more? The train has left the station, but it's not too late to hop on board. How can people find you?
Yeah. So, I have a website. It's CourtneyMoeller.com. I'm on LinkedIn, and I actually have an oil and gas report. If anybody wants to learn a little bit more about oil and gas and what the tax benefits look like, you can get it at oilandgasreport.net.
Love it. Love it. Love it. All right, y'all. This is an incredible show. This is, and for our audio listeners, that's CourtneyMoeller.com. It's in the show notes. It'll also be in the show notes. If you can't find anything else, reach out to me and I will get you to her. This is an incredible show. Miss Courtney, I want to say this to you publicly. Thank you for what you do. You are necessary. Thank you for doing this. We need this in order to do better in life. You are necessary. So never give up.
Oh, that gave me chills. Thank you. This has been so great, and it's been such an honor to be here.
It's an honor to have you. The pleasure is always all mine. I appreciate you so much. All right, y'all. We have to let this incredible woman go. She has many more lives to change, many more lives and companies to impact, and many more oil rigs to invest in. And if you want to be a part of that journey, connect. Like we end every show, I hope this message was inspirational. I hope it was impactful. And I hope it helps you take things to the next level. Like we end every show, take care of your friends, take care of your family, and always take care of business. This is Marcus, your favorite gentleman, and the incredible, super fabulistic espialidocious Miss Courtney Moeller signing off. Love you guys. Bye.